Question 1. A trader had an opening capital of $3,900. If his drawings were $900 and his closing capital was $4,806, what was his net profit? Now, we all know the formula to work up your closing capital, the opening capital, add net profit, less drawings to give you closing capital. Now, since we already have some figures there, we do have the opening capital, we do have the drawings, we do have the closing capital. We need to work out your net profit. So, now the first to work out our net profit, it should be closing capital, add the drawings, less the opening capital to give us the net profit, and given the figures that we have, 4,860 plus $900 minus $3,900, answer there should be C, 1860. Right, there we go, guys. Now, question 2. The purpose of electronic clock cards is to, of course, record employees' attendance, which is B. Question 3. Control accounts are kept in order to assist management in, well, obviously, the answer is A, locating errors. Question 4. Which the following lists contain assets accounts only? Assets will include C, cash, inventory, furniture, and motor vehicles. Time for us to move on to question 5. Now, question 5. Partnerships are formed for the purpose of 1. Combining capital from different persons, yes. 2. Benefiting from different skills and specializations, of course. And 3. Sharing ideas, experiences, and responsibilities. Definitely correct. Answer should be D. Now, question 6. In a partnership, which the following transactions is compulsory? Well, compulsory transactions will obviously be D, sharing of profits or losses. Now, question 7. Which is the balance, or what is the balance in sales ledger control account? Let's go back to the data. Let's see what we have. Ishania's cafeteria does not keep a complete set of accounting records. The bookkeeper provides you with the following information: cash sales, $500, opening debtors, $700, credit sales, $1,000, cash received from debtors, $1,250. Again, what is the balance on your sales ledger control account? Now, the sales ledger control account records all your transactions between you and your debtors, right? That is sales ledger control account. Now, cash sale is not a transaction between you and a debtor. So cash sale is out of the equation, guys. So opening debtor was $700 plus credit sales. That's going to give us $1,700 this being owed to us, minus what we did receive, $1,250. So 7 plus 1,000 minus $1,250 will give us our closing balance as B, $450. Good. Moving on to question 8. Which the following formulae represents the correct statement of financial position equation for calculating the value of assets. Basically asking us, what is the accounting equation? Well, assets is equal to liabilities plus capital, which is D. Good. Time for us to move on to question 9. R. Stevens, a petty cashier, receives a float of $350. He spends $320 and requests that his float be increased to $400. If his request is granted, how much will he receive? Alright, guys, so the float currently is $350. He spends $320. That means he has $30 remaining. Now remember, he now needs to receive a sum of money to increase his float back up to the new value of $400. So if he has $30, then his float has to go up to $400. Then obviously he should receive $370. Good. Question 10. Any expense which is written off entirely to income statement is known as revenue expenditure. Definitely correct. Revenue expenditure is all this money being spent on your operational expenses, which shows up in your income statement. Now, question 11. This company accountant has not recorded rent owing for the period. Which accounting concept was violated? Well, definitely the accruals concept would have been violated. A. Question 12. P. Hawk as a manufacturing business, the cost of his raw materials is $1,900. Wages, that's rates on the rent total $2,000. Factory wages amounted to $2,005. Number of units produced is 640. What was the cost of one unit? Well, let's add up the total cost. 1,900 plus 2,000 plus 2,500. That's going to give us the total cost, guys. Let's put that up on our calculator. $6,400, and the amount of units produced is 640. So divide by 640, and so should be C, $10 per unit. Good. Time for us to move on to question 13. Item 13 refers to the following information. We have a list of assets here. They're asking us what is the value of your non-current assets, guys. Non-current assets, let's see what our non-current assets will be. Non-current assets include things like our furniture, fixed asset. We have motor vehicles, great, and we do have our premises. Add up all those should give us a value of $42,000. C as our answer. Great, time for us to move on to question 14. If we read the requirement below, we'll see exactly what the question is asking us. What is the capital of Foster and Scott at 6 March 2021? All right, item 14 refers to the following information. We do have current liabilities, current assets, non-current assets, and non-current liabilities. To work on our capital, it will simply be our assets minus our liabilities. Assets in this case include 100,000 current, non-current 200,000. Those are our assets down here. Liabilities will include current liabilities and non-current liabilities. Put them together, assets minus liabilities, answer should be B, 90,000. Great, time for us to move on to question 15. Which of the following assets will be considered the most permanent? We all know, guys, premises definitely from this list will be our most permanent asset. Good. Question 16. Which of the following arrangements show the current assets in order of liquidity? Liquidity looks at the ability to convert assets into cash very quickly. And A definitely should be our answer. Cash in hand, most liquid, then cash at bank, and then debtors. Nice. Question 17. A motor van was credited from AG Motors for use in a business. How should this be recorded? If a motor van was credited, it means it was bought on credit. Therefore, debit your motor van, you credit AG Motors. D as our answer. Question 18. In your statement of financial position, expenses owing will be listed as your current liabilities. Definitely correct. Question 19, guys. The total credit of the bank column of your 3-column cash book is greater than your debit column. The most likely reason for this is that, well, definitely A, there was an overdraft. Credit side greater than debit side means you spent more than what we received. Therefore, A, overdraft. Good. Question 20. Which of the following accounts show how profits and losses are shared amongst partners? Well, as we all know, well, if us to share profits amongst partners in a partnership accounting, we would be using an appropriation account B. Question 21. Which of the following entries would not appear in a cash book? Cash book records both cash payments and cash receipts, guys. So B, goods sold and credit will not appear in a cash book. Question 22. Which of the following amounts is the cash balance at 31st March? Well, let's look at the data. Item 20 refers to the following information about the receipts and payments account for the month of March from NGO. Now, this is a non-profit organization. Subscriptions received 300, rent paid 60, purchases of games 150, postage of circulars $20, and proceeds from book sales 250. Now, to put together your closing balance in your receipts and payments account, you simply add up the total of your receipts, subtract it from your payments, and you should get your balance. Let's check it out. Subscriptions received is money coming in, that's receipts. Proceeds from book sale is receipts as well. So those are our receipts right here. Seeing it here. Our payments will now include rent being paid, purchase of equipment, and even postage. So those are our payments. So guys, receipts subtract your payments should give you the value of $320. Let's make sure, right? So that's $550 there as our receipts. Our payment should be $230. Good. And 320. There we go, guys. Awesome job. Time for us to move on to question 23. Which of the following documents acknowledges a loan to a company at a fixed rate of interest? Definitely answer should be D, debentures. Question 24. A business receives $5,000 for rent revenue and deposits this amount into its bank account. How will this transaction be recorded? Well, money is coming in from rent revenue, going straight into our bank account. Debit your bank, credit rent revenue. Answer should be D. Moving on to question 25. What firm has the best liquidity position? Let's have a look. Item 25 refers to the following information for four firms in the same industry. Apex quick asset test ratio 2.91 to 1, Flora 3.60 to 1, Dalton 1.15 to 1, and Season 1.1 to 1. Well, the best company in terms of liquidity here should be Flora, which has the highest current assets in relation to the current liabilities in the amount of 3.60 to 1. Good. Question 26. A businessman offers a reduction in price for prompt payment for goods purchased. Under which column in his three-column cash book would this reduction be entered? Business person is giving discounts. Therefore, in his book, that will be discount allowed. Nicely done. Question 27. Which of the following best describes the double entry system of accounting? Double entry, as you know, each transaction must have a debit and a credit entry. Answer should be D. Time for us to move on to question 28. Mr. Brown owns a business. It has no employees, but in recent times, individuals have been interviewed. What type of business is this? Well, he owns a business. No employees means that he's running the business on his own. Therefore, this should be a sole trader. Good. Time for us to move on to question 29. Question 29 gives us a table to have a look at and ask us what is the total allowance for doubtful debts. Let's have a look at the table. Over 3 years, the AR was $6,000 and the allowance would be 3% of the AR figure. So in the first, or for over 3 years, 6,000 by 3% can give us 180. Over 2 years, AR is 4,000, the allowance is 2%. So 4,000 by 2% can give us $80. Over 1 year, 8,000 is your AR, the allowance is 1% of your AR. 8,000 by 1% can give us $80. After adding up all these values together, 180, add 80, add 80, we should get a value of 340. Good job. Right, moving on to question 30, guys. After careful consideration, a business decided to reduce its allowance for doubtful debts from 500. So currently, the allowance is $500. Good. Its trade receivables at the end of the financial year owed is 10,000, and the firm will decrease the amount allotted for the allowance of doubtful debts from 6% to 4%, which entry below will reflect the change. Right, guys? So first of all, if you are reducing your doubtful debt figure, you should debit the provision for doubtful debts account and credit your income statement. So let's see what your value should be then. Now we are moving from 500 to 4% of your trade receivables. 4% of your trade receivables should be $400. So if you're moving from 500 to 400, that means the reduction will be $100. And as we did mention before, you normally debit your provision, credit your income statement with $100. Therefore, your answer should be D. There we go. All right, so this question was for you to know what was a double entry in order to decrease the provision, and also know what the figure would have been in terms of how much it was being reduced by. Got that answer as D. Great. Time for us to move on to question 31. A public limited company issued a prospectus offering shares for sale. We have ordinary shares, 200,000 being offered for sale by $2. 5% preference shares, 10,000 being offered for sale at $5. The issue was fully subscribed. How much capital did the company raise? Well, guys, 200,000 by $2 plus 10,000 by 5. That's going to give us $450,000 as D. Moving on to question 32. We have another bit of data here, guys. And we are being asked, what is the cost of goods sold? Let's see what data we have. If we look very closely, this looks at data that we normally have in a trading account. Let's have a look. Sales, sales returns, discount allowed, opening stock, closing stock, purchases, and purchase returns. We are being asked to work with the cost of goods sold. But the cost of goods sold, as we all know, will be your opening stock, add your net purchases, right guys, add your net purchases, then you subtract your closing stock. That's going to give us the cost of goods sold. Cost of goods sold is the value of the goods that we sold. All right, let's do exactly that. Opening stock is 9850. Net purchases will be the purchases less the purchase returns. And your closing stock is $11,075. So you put together your workings, opening stock, add net purchases, less closing stock, our cost of goods sold should be none other than $50,653. There we go, guys. All right, let's make sure that we're all good to go with that answer. 9850 add 52640 minus 762 minus 11075. Cost of goods sold $50,653. Good job. Now moving on to part, but in other part, question 33 asking us about the gross profit using the same data. Now, since we worked at the cost of goods sold as $50,653, to get your gross profit will simply be your net sales minus cost of goods sold. Net sales will be sales less sales returns. That'll be our net sales, and then we subtract our cost of goods sold. All right, guys, let's look at our figures. Net sales should be 83,868 minus 1570. Good. That's our net sales. Now we subtract the cost of goods sold as 5653. Answer should be 31,645. There we go. Question 33, A. Moving on to question 34. Expenses and revenue accounts are classified as, well, we all know this, nominal accounts. Good. Question 35. The owner of a business does not keep proper accounting records, but she knows that capital on January 1st was 40,000 and 85,000 on 31st December. She withdrew $1,000 in inventory during the year. What is her net profit for the year? Now, guys, this is very similar to question 1. And during this paper, you'll notice a couple of questions like this, where they give us a couple of data to work with, and they ask us to work out, your capital, your net profit, or things like that. In this case, they're asking us to work with the profit. Now, opening capital, add net profit, less drawings will give us closing capital. We all know that from our balance sheet. Opening capital plus net profit, less drawings equals closing capital. But what figures do we have? Well, in this case, we do have the closing capital, we have the drawings, and we have the opening capital. We need to work with the profit. Well, just to rearrange this equation, closing capital, add your drawings, less your opening, gonna give us that figure. 85,000 plus 1,000 minus 40,000, gonna give us 46,000 as our net profit. And guys, this here the side, this is what we are accustomed working with in our statement of financial position. Once we rearrange this formula, we should get our answer comfortably as 46,000 as B. Good job. Time for us to move on to question 36, which is coincidentally almost the same thing. M Traders incurs a loss of $1,500 in 2022. The business closing capital was 20,000. Drawings was 40,000. What is the amount of the opening capital? Now they ask us for the opening capital. Right, guys? And they give us a net loss as well. Now, the normal equation that we accustomed with, opening capital, add net profit less drawings, but in this case it's a loss, so it will be opening capital minus your loss minus the drawings can give us closing capital. And we now switch around the equation first to get the opening capital. So closing stock plus the drawings plus the net loss going to give us the opening capital. Answer there should be 20,000 plus 4,000 plus 15 to give us 25,500. There we go. All right, question 37, guys. A credit balance on the electricity expense account indicates that electricity is owing, accrued. And that balance brought down the credit side of your electricity expense account will show us upon accruals. Good. Moving on to question 38. Key Antoine was charged 2,400 for electricity for the year. What figure would be recorded in the statement of the financial position if 2,700 was paid? All right, guys, let's make a little change here. So 2,400 was the amount charged for the year. He did pay 2,700, therefore he prepaid 300. Right, there's a prepayment, and therefore 300 will show up in your statement of financial position. Good. On the current assets. All right, question 39. A company declares a dividend of 15%. What's the value of the dividend sent to the shareholder who owns $1,500 worth of shares? Reason why I said $1,500 worth of shares is 1,500 shares by $1 to give us $1,500. Well, simply work out 15% of $1,500, and that should give us the value of two $225 B. All right, question 40. Rose contributed 7,000 in cash and a motor vehicle with 3,000 to our partnership. Her contribution will be recorded as, well, total capital that she's introducing is $10,000. So definitely credit her capital 10,000, debit the cash 7, debit the motor vehicle 3,000. Answer should be C. Right. Question 41. Mr. Smith does not keep proper accounting records. He began his business with 10,000 in the bank. He uses his vehicle and buildings with 6,000 and 15,000 respectively as part of his business. Customers owe him 4,000. He withdrew 1,500 for personal use and owed suppliers $2,000. What is his closing capital? All right, guys, so let's work at his opening capital first. Opening capital will be his assets minus liabilities. Once you get that opening capital, you then subtract the drawings to get closing capital. Let's put it into a calculator. Let's see what's happening here. Let's work at the opening capital. Bank assets. Vehicle was 6,000. Building 15,000. All these are the assets. Right? Customers owe him 4,000. That's part of his assets as well. And he owed suppliers 2,000. So let's subtract that liability, 2,000. $33,000 there. Now he took out drawings with 1,500. Therefore, his closing capital, 31,005. There we go, guys. C as our answer. Good. Time for us to move on. Question 42. Which of the following items would be used to adjust the cash book balance before preparing a bank reconciliation statement? Remember, whatever is in our bank statement but not in the cash book now must now be updated with those values. Well, items that will show up in the bank statement but not in the cash book will include A, direct transfers and dishonored checks. Good. Question 43. Elvin starts his bank reconciliation statement with the bank statement balance. How would unpresented checks be treated? But the key part in this question is to read it back and understand that the question said he is starting with the bank statement balance, not the adjusted cash book, but the bank statement balance. If you start with bank statement balance, you normally subtract your unpresented checks. Good. Question 44. In preparing its final accounts, a business omitted to include return out inwards. They forgot to include return inwards. What or which of the following items will be affected by this omission? Well, net sales definitely will be affected by omission of return inwards. And obviously, if net sales is affected, so will your gross profit. So 1 and 3, B. Moving on to question 45. Mr. Ramos Shoemaker bought a motor van for 11,000 cash. In recording this transaction, he should debit the motor van, credit cash, A. Question 46. An article is subject to a 20% trade discount. List price $600. What is the sale price? Right, guys, so let's subtract the discount. 600 multiplied by 20% gonna give us 120. That's your trade discount. 600 minus 120, sale price should now be $480. Moving on to question 47. P. George buys $120 or $120 worth of inventory from T. Singh on credit. Terms of payment of 5%, 30 days. If P. George pays within 12 days' time, how much should he pay? Alright guys, terms of payment 5%, 30 days. This means if he pays in 30 days, you're gonna get a 5% cash discount. 120 multiplied by 5% gonna give us $6. Therefore, that is his cash discount. So 120 minus $6 gonna give us 114. That is the amount that he should pay. C. Alright, question 48. The double entry for recording credit transaction T-Sing's book should be. Okay, so come back to the same data. Recording it in T-Sing's books. If T-Sing is selling goods and credit to P. George, you normally debit P. George on your credit T-Sing's sales account. Therefore, the answer should be D, guys. There we go. Moving on to question 49. Right, 49 and 50 refers to the following information. We do have a partnership question coming up now. So if you look very closely, we do have an appropriation account. Net profit brought down figure is missing, but we have interest on drawings, salaries, interest on capital, and we have the share of remaining profit missing value there as A also. Let's see, guys. What is the share of the remaining profit received by A? So they're asking us what is this value? Right, how are we going to work this out? Well, if you look very closely, B is receiving $3,873, $3,873, which is equivalent to 25% of the total share. So, guys, this is a mathematical question. If you need to work out 75%, we know that 3873 is worth 25%. We simply take 373 divided by 25 multiplied by 75, and the answer for A, which is 75%, should be $11,619. There we go. All right, good job, guys. Let's move on to question 50. What is the net profit brought down? So they're asking us for net profit up here, guys. All right, good. Let's check this out. All right, now remember the share of profit was 11,619. Let me put that figure here. Put it below here, right? This was the share of profits for A. 11,619. So guys, if we take 11,619 and we add it onto this 3873, we're going to get a total share of profit. Total share of profit should be 3873 plus 11,619. Total profit to be shared, I should say, right? 15,462. I'm making sure 492. So it means that these values up here should amount to the 15,492 because this 15,492 was the total shared amongst the partners. But guys, we need to work backwards now to figure out what was the original net profit. So how do we work that out? All right, now you guys know from this appropriation account, you normally take your net profit, add the interest on drawings, subtract your salaries, subtract interest on capital. But now we have this figure down here, which is totaling 15,492. You now need to work backwards to get that net profit figure. So what we simply do, we work backwards as I just said. So 15,492, add interest on capital, add your salary, minus the drawings, and that should give us our value. This is the equation here. Profit to share, add the interest on capital, add the salary, less the interest on drawings, and should be C when you guys work it out. All right, C should be the answer. So again, you're working up the line, working backwards. 15,492, add the 7, add the 10, minus 25 to give us 29,992. There we go, C. Moving on to question 51. Now, question 51 gave us a T account and asked us what's the closing balance. So, guys, you all know the balance of accounts. 22,000 is the large side, small side 15,000. Balance and figure should be D, $7,000. Question 52 gives us the following information: prime cost, factory overhead, opening work in progress, and closing work in progress. The total cost of goods manufactured should be, well, add them up. Prime cost, add the factory overhead, add your opening work in progress, subtract your closing work in progress, and should be C, $80,000. Question 53. A vehicle costing $80,000 is expected to depreciate at a rate of 10% per year. What is the total depreciation on the vehicle after 3 years using the straight line method? Straight line method means a constant sum being depreciated every year. Constant sum in this case should be $80,000 by 10%, which is $8,000. 8,000 by 3 years should give us 24,000. C. Right, moving on to question 54. A trade debtor is unable to pay their outstanding debt of 450. Trade receivable, the same as a trade debtor. However, an agreement was made that they would pay 30 cents on every dollar owed. How will this payment be recorded? Now, when they pay, you'll debit our cash and credit the debtor, or what's the value. 450 by 30 cents gonna give us $135. Therefore, B, debit cash, credit the debtor, $135. Good. Moving on to question 55. What is the closing capital of KD Limited? All right, guys, we saw so much questions like that. So let's go. Opening capital less your loss minus your drawing should give us closing capital. Answer should simply be A, $1,000. Question 56. Porter bought inventory for 500 on credit. Which book of prime entry will this be recorded? Since he's buying goods on credit, this should go in the purchase journal D. Good. Question 57, guys. Karen and Gart, partners in a business, share profits and losses in a ratio of 2 to 1. What is their respective share if the business makes a net profit of $3,600? Well, there's a ratio sort of question, 2 to 1. K is getting 2/3, G is getting 1/3, simply 2/3 by 3,600 for K, and G gonna get 1/3 by 3,600. Answers A. Karen 2,400, got 1,200. There we go. Question 58. V and R are partners who share profits and losses in a ratio of 30 to 70% below the partners' balances at the end of the year. They give us their capital, they give us their drawings, this gave us a net profit including interest on drawings and capital $20,000. Note, VNR pays interest on drawings and capital at 2% and 5% respectively. What are the interest on drawings paid by VNR at the end of the year? Alright guys, well the interest on drawings is 2%. Drawings for V is 2,000. Therefore 2% by 2,000 give us $40. R, his drawings is 1,000. Again, he's paying 2%. 2% by 1,000, $20. Answer should be B, $40 and $20 respectively. Great. Moving on to question 59. Now 59 and 60 gave us some data to work with again. We have sales and purchases from the records of LT Limited. We have closing stock on the first and first out valuation $5,000, on the last and first out valuation $21,000, on the AVCO valuation $3,000. Question is, what is the gross profit under the first and first out technique? Right, guys, this is a normal trading account extract that you have to prepare. We all know sales minus cost of goods sold is gross profit. We know this. And cost of goods sold is simply purchases less closing stock. All right, let's work it out. So we are seeing sales here to be 45,000, not bad. To work out cost of goods sold will be a purchases less the closing stock. In this case, as the closing stock value using is 5,000 because that's the question asked us, first and first out. So purchases less closing stock, 10,000 minus 5,000 to give us cost of goods sold as $5,000 here. Therefore, sales less cost of goods sold can give us a gross profit of 40,000. So on the first and first out technique, gross profit is $40,000. Great job, guys. Time for us to move on to question 60. Final question coming up. Gross profit under the AVCO method. Well, same sort of calculation. Put on our sales. We have our purchases as 10. Now on the AVCO valuation, closing stock is $3,000. We're going to use that. Good. Cost of goods sold will now be 7,000. Therefore, gross profit will be 45,000 minus 7,000, which will give us a value of 38,000. Answer should be C. There we go, guys. Awesome job. So, I guys hoping this paper helped you guys quite a lot, and I'm sure you'll be looking forward to our upcoming videos. Please like, comment, and subscribe.